if it's correct or wrong without any emotional bias. So there are a lot of the times when people make a statement and someone else will have an emotional reaction to it. It's just a statement, it's words. Why are you having such a reaction to it? It's your reality that's distorted. It's not a problem with the statement itself. It's not a problem with the universe or reality in general. It's the universe that you have made in your head. That's where the dissonance lies. And most people don't get that. So I would say that curiosity by itself changes everything.
Love it. That's amazing. That's the first time I've heard you say that. That's G. I love that. For me, in terms of wisdom, I've made a lot of mistakes, which is like the best thing ever in hindsight. I think wisdom comes from different experiences and comes from learning from your mistakes. And I actually didn't even intend to, but the first proper job I went into out of university was into sales. And then from sales, I went straight into, like, I did both at the same time, but then I crossed over into trading. And both of those, there's a lot of parallels. Like, I do a lot of my daily lessons, and there's a lot of parallels between sales and the markets and trading in general. So I've basically spent my entire adult life dealing with people directly or dealing with the markets, which are like a reflection of people and opinions and emotions and psychology. And you're always going to be wrong. Like, you're going to be wrong every day or every week in the market. So you get a lot of opportunities to learn as long as you take those lessons and you don't, like, you can't have too much of an ego where you don't want to admit you're wrong, because I mean, it's going to happen all the time. And this probably would have been a fault, and it is a fault. Like, I'm a very, like, fast actor, and sometimes I won't think things through very deeply, or at least I used to not. So when I went into sales, I would always be like, just want to get on the phone, just want to go to the meeting, I just want to do this thing. I don't want to read all of this, and I don't want to learn all this before I start. I would just throw myself in head first. And so I'd make loads of mistakes. But then you learn very fast, right? And when you make a mistake, it's always the best way, because you get that kind of sting of embarrassment. I remember making stupid cold calls, turning up to meetings and completely bombing them. And then you get that feeling of, like, you feel like a total idiot, but you never make that mistake again because it just deep down ingrains into you. And then you learn a lot. So I learned a lot about how to deal with people directly and read people both over the phone and in person, body language, different types, how to approach it. And then from the markets, it's like just reading every day about the markets, just watching the charts every day, making mistakes, making money, losing money. I think if you allow it to, that's the best teacher, right?
It's funny that you mentioned it, Michael. Me too, almost to a fault. I am quick on making decisions. I sometimes go blind into things, and
Hmm.
obviously that gets you knocked down a lot more times than you would like. But at the same time, it teaches you. You're not afraid of any new situation because you know what you have overcome in the past. So
Yep,
yeah,
absolutely.
just challenging yourself. Just put yourself in uncomfortable situations. At the end of the day, I keep saying life is just a story, right? It's just it's a novel, it's your life, it's just one novel with a lot of phases, like a lot of short stories in it. All you can do is make it interesting. There is no main objective, right? Every story is unique in itself. Make it an interesting one rather than a boring one. That's it.
Yeah. And it's easy to tie yourself in. Like, I always did this, especially when I was younger. It's easy to tie, certainly, like, for when you're young and you don't come from money and you're ambitious, you tie everything to money. Like, you tie everything, whether you're successful or not, is tied directly to, like, how much money you have in your bank account at that time. But when you look back over it later on, you'll realize that all along the way, you're learning things, you're having these different phases and stories. And when you look back at your life, guys, not every single part of it has to have been when you're rich. You're going to look back and remember the times you're broke and all the cool shit or dumb shit or fun shit or crazy stuff or lessons you learn. It's all part of who you are and shaping your character. Like, don't fall into this trap of thinking that life can only begin whenever I'm rich, because it's fucking, you're living it now, right? Don't delay, or don't put off this thing of, oh, I'll feel good, or I'll rest, or I'll feel this or do that when I'm rich. You're living it as you are right now.
I guess we got rugged again. So we'll wait for Michael to come back.
We're back.
All right, you're back.
I don't know what kind of wisdom I get from getting rugged on Vimeo. Nothing, but I don't know.
It's
Yeah,
okay, man. I will tell the stocks campus to short it. We have been hating on Vimeo as well.
that's what we were laughing at it as well, because someone asked me on altcoin requests to look at the Vimeo chart. I was like, yeah, I can see why Vimeo looks like that.
Yep.
Um, Next, hypnosis. GM, please offer a quick update on your current projections for SUI. I don't really have any. Do you have any thoughts on SUI, Ayush?
On
Should we take it?
Sui, let's
Yeah,
see. I haven't really been trading it, so
yeah. You can share your screen as well if you want to.
nah, it's pretty straightforward. It's coming to the top of the range. It's came straight from the bottom, so I would expect a couple weeks of consolidation between 1.5 to 2. It
Mm-hmm.
could go to a month of consolidation for all we know.
Mm-hmm.
Once it gets above that, then it can take off.
Yeah.
Obviously, multi-month consolidation, so it should have a nice run once it can hold above 2, but I
Yeah.
don't really expect it to break out right away.
Yeah. I think that agree with Ayush, and if it does anything different to that, it might look a little bit like optimism did, because optimism was quite strong during the last bear market when other things weren't, and each time it would break to new highs, it would then pull back. I wouldn't be surprised to see Sui do that because it's kind of running. It's running a little bit earlier than the market. I fully expect it to make a new high. I'd be watching then at that point because it's leaving behind obviously a lot of inefficiencies below. I'd be watching to see does it do something a bit like what Op has done, but otherwise, agree with Ayush. Hitman GM question for Ayush: when we see there are better opportunities or narratives going on in the stock market while crypto is not offering great opportunity, it would be nice to have some understanding of stock market and the behavior of stock prices, how it works over there. What are the things we can study as a starting point and consistent small steps to gain some knowledge? For example, my friend sometimes talks about IPOs and how they're good investments and stuff like that. TA remains the same. So after some testing and tweaking, we can take our systems, test them over the stocks, and get ready to go when the opportunity presents. Thank you both for your guidance and love from India. GM.
So GM Hitman, I would say again and again, I'd say the same thing in Stocks Campus, the system we have in stocks, and I know you guys are well versed with TA. You can use the same system that you would use for active stocks, for growth stocks in crypto. They trend almost just as good as each other. You don't really need to know anything about the internal dynamics of companies. You don't really need to know too much about IPOs, right? IPOs, for the most part, you will simply trade how you will trade a new crypto coin. You would wait for a consolidation, then you would take a breakout, you would manage your risk. So there's nothing that special for transitioning from stocks to crypto and vice versa. You're not really having a diversified dividend portfolio or something along those lines, because that's a waste of time for the most part, and we can statistically prove that. We have tried to do that in the stocks campus. For the most part, just look at active names that move, growth stocks, and then trade them the same way you would trade crypto. And the only difference would be account for overnight gap ups and gap downs, because it doesn't trade 24/7. Account for company earnings, because news does come. So you have to be aware when the company is supposed to communicate with you. So just be a bit more aware, and that's about it. Nothing special that you need to change.
Mm-hmm. Makes sense. And I say this as well, guys. You want to first and foremost have your systems and listen to the charts, because if you get too far into the narrative or the fundamentals or whatever, like especially in crypto, you're going to miss stuff because the stuff that tends to run, you look at it and you're like, why the fuck's this thing running? It doesn't make any sense. And also another thing, everyone is pretty much here is on social media, like specifically Twitter for news. By the time you hear about something, a coin or a stock on Twitter, it's not necessarily too late, but it's not early. So try not to be a follower of narrative, because price leads the narrative. Like price goes first, then people assign a narrative to it after, right? So if you are focused on the charts and identifying early stage trends, breakouts from consolidations near the lows, you'll be long before people talk about it. And then you'll, over time, not every single time, but over time, you'll end up being early more often than not. Hival, GM, what's your opinion on the Daddy token? I'm trying to join the Telegram channel to keep up with the updates. For some reason, I'm having trouble signing up Telegram. Well, I don't. Signing up for Telegram is a separate thing. As for the Daddy token, I don't really have like a strong opinion on it. Every week on Altcoin Request stream, which is you can find it in Daily Streams channel. I do. It's always requested, so you can see my weekly opinions on it there. It's always just based on the chart. I just give levels and say if it goes here, expect it to continue. It's a meme coin. Meme coins are very much dependent on market conditions and attention and interest, which is now back. So you can see stronger trends then. And obviously Tate's doing whatever Tate does. But there's not really much point me giving an opinion on Daddy, because the best information you're going to get is going to be from Tate himself, which you guys get access to in here in the real world. So there's nothing I could say that he wouldn't already be saying. What about you, Ayush? Any thoughts on it?
I mean, I completely agree, and you raised a really important point. Is as long as you know the chart, as long as you know the price levels, you can trade Daddy or any other token. For one thing, I would say, and it relates to the question before Daddy as well, guys. You guys have seen me discuss a lot of macro. All right, I have a decent idea on what goes on in an economy and what interest rates do and what new companies do. And at the same time, when I'm giving my analysis about a specific chart or a specific stock, the only thing that matters is price. Why?
Mm.
Because price pays. Everything else is BS. Everything else is something you have made up as a story in your head. In a complex system, something like an economy, something like the stock market, you do not have clear causations. That's why you can have bad earnings and really good stock market performance. You can have good earnings and the stock crashes, right? Sometimes the CEO is removed and the stock outperforms. They don't know what the old CEO is going to do or what the new CEO is going to do. It's just there's no clear causation. So price levels are all that matters, and that goes for Daddy, that goes for crypto, and that goes for stocks. So at least that's the bias from a person who has studied a lot of the macro stuff deeply and can understand what's going on, and still you cannot manage risk based on that.
Yep, couldn't agree more. It's the charts will never lie to you, right? They're not always going to be right, but they will always allow you to manage risk and have mental clarity. If you're trying to make trading decisions based off what's happening with the Fed and what's happening with liquidity and what's happening with earnings if it's in stocks, it's a mess. The chart will give you an invalidation, which is the most important thing. You can say, first of all, if I'm going to go long, I'm wrong here. So you have that conviction to say, all right, as long as it's above that level, I'm long. And if it goes below it, I'm out and I reassess. And over time, when you do that, you'll realize your thinking is so much clearer.
Exactly. Good trading is simply a set of, it's like a function of if then scenarios. So you guys can see when we were in the panic or the chaos of early August, both me and Michael, we had clear points, right? He had a clear invalidation point. It's like, all right, if it comes back about the monthly open, I will get back long, but right now I don't want the risk. For me, also, no matter what happens, it's like if we hold below the 50-week moving average, if the weekly candle closes below it, then I will get out. It's that simple. Then it doesn't matter if there's a nuclear war going on, if I don't know, Israel and Palestine disappear off Earth, whatever happens, if there's a meteor coming, doesn't matter. There's an if then scenario which tells you exactly when you're going to get out, no matter the narrative. And that fixes the risk. Now you know exactly how much you're risking. And it doesn't matter all the stories that you make up in your head. So
Yep, absolutely. Kyle, GM, being a delivery driver, long days are ahead, Christmas build up. I wanted to ask you both what we just say in terms of the markets is the bare minimum to keep up with, both inside your campuses and outside, uh, or whether I should take a step back whenever my busy time starts and come back again once I have more time. Okay. I'm always, I'm always a big believer that you should never step away entirely. You can reduce the amount of time you spend in the market if you're focused on other things, but you always want to keep your eye in so that you are up to date, right? So that means if you're used to spending 3 hours a day in trading and analysis, but you get super busy, just 1 hour, 30 minutes, whatever. Just keep checked in. And the number one thing to focus on are your systems. Get them built, get them tested, get them live so that at the bare minimum, you're just waiting for signals. You're waiting for your systems to fire. And obviously, if you're very busy, make sure they're swing trading mostly. You don't want to be like waiting for day trading signals if you're going to be driving on the road 12 hours a day and not able to trade it. So focus on your whatever daily charts, 4 hour charts, stuff that might last a few days or a few weeks if you get in, and have it so that you're just checking in the morning. Any signals, any setups, any trades to get in. If not, okay, cool. We'll check back in tomorrow. What do you think, Ayush?
I would say the same thing. I have mentioned it to a lot of students in the campus as well. If you are trading on the daily charts, you need 1 hour per day. All right, you don't need to look at the charts all day. If you're trading on the weekly charts, you need 1 hour per week. Right? If you're trading on the monthly charts, you need 1 hour per month. Like that, it's that simple. And this is after you already have your system. Of course, if you're going to start designing your system, then you need more time. If you're backtesting, you need more time. But once you already know what kind of setups you take, you simply have to see if any setups came on the screener that fulfill your criteria, And if they do, you simply know when you're going to enter, and then you just put your stop, put your price target, and then simply leave. If it's something where you have a trailing stop, then you don't even need your price target. You simply raise your stop every day or every week, depending on the chart you are in, and then you just get out when price stops you out. So you don't even have to be active. And one of my friends actually does that. So I set up a system for him, which he trades on the weekly charts because he's more of the long term investor kind, and he checks the screener once a week on Sundays for about 30 minutes, figures out if he needs to do anything. Monday morning he simply enters, puts his stop, and leaves it alone. Doesn't need to look at it all week again. So you can do something like that. As long as you have a system, you can just trade on the weekly charts if you're 1 hour a week, monthly charts if you're 1 hour a month, and so on.
Hmm. Well, when you say the screener, is that the trading view screener or is it something else?
It's he has it set up on TradingView Screener, but you guys can have your own, right? Like crypto, for example, there's something on Messari. There's something
Yeah.
on TradingView has two types: crypto coin screener and crypto screener.
Yeah, I've
So
got a lesson on the crypto screener for G's there. It's
nice.
the way I have it on the lesson. By the way, I get this question a bit. It's oriented towards day trading, of finding active coins on that day. You can filter and change the settings around to find anything, higher time frame stuff as well. So good stuff. Um, Few GM for Ayush. What would be some of the main things you would recommend a day trader from Crypto Campus keep an eye out for pre-New York Open and during the New York session from a stocks POV? So to say, if there are any essential correlations or additional tools like divergences, etc., to add to our crypto arsenal in preparation for New York session to improve probabilities. Yeah, so big change in the market since the ETFs, obviously. Bitcoin is just so active in the New York session, and a lot of my guys are trading that. So what do you think there?
I would say just keep an eye out for red folder events. So red folder events are the major events that can cause some volatility in the markets. A few of them actually change the direction of the TradFi markets. So I would say CPI, NFP, and FOMC meetings.
Yeah,
Obviously, they can change the direction of the markets. All the other ones, they will cause some volatility. All right. So they might see price move up or down 1% within a matter of an hour. And you want to be aware of that if that's what you are, if you're day trading. So just focus on the red folder events, and for the most part, that's about it. There's nothing major.
yeah, perfect. I just seen there was a follow up question there, Victor. Can you please repeat that? If you're trading on the daily chart, you need 1 hour a week. If trading a 1 week chart, you need how much? What Ayush was saying there is, regardless of which time frame you're doing, you're filtering for though that time frame of opportunities and spending an hour a week finding your setups, right? So if you're looking to hold stuff longer, or if you're looking to hold it shorter, it's the same amount of analysis.
Yeah, it said 1 hour. If you're on the daily charts, it's 1 hour per day. If you're on the weekly charts, it's 1 hour a week.
Hmm.
So, and if you're on monthly charts, it's 1 hour a month.
Yeah,
So that's how I do it.
perfect. Maybe we'll chat about that offline, and I'll get some ideas from you and put a lesson in my campus about it. Um, all right, for me, GM, do you use harmonic divergence on stocks to find inverses or any sort of alpha for crypto? What I mean is like using the S&P as sort of how you'd use OI, understand the basics of money flow. Maybe see something like IBIT takes out liquidity, then reverses while Bitcoin does not, then reverse, for example. Um, I not really. Like one of the things I do look at is the gold Bitcoin relative strength chart and the Nasdaq Bitcoin relative strength chart, which you can see both of them are potentially reversing here, which would be good for Bitcoin. As you saw, BTC obviously outperformed all the way through 2023, and then it started to go sideways, and then the Nasdaq outperformed in the summer. You're starting to see it now, maybe rolling over, where you might see a leg down on this, which would be bullish for crypto. That's about as far as I would go. I don't think like individual stocks with crypto give any kind of signal. And I used to look a lot more at what was happening like intraday with the S&P or the Nasdaq versus crypto, but I find that over time it's mostly correlation, not really causation, and so you can just be behind the curve if you're too focused on it, right? If you're trying like if you see a dump in the S&P, you're like, oh my god, I need a short Bitcoin. It doesn't tend to work out. So if you just stick with Bitcoin's structure, Bitcoin's levels, Bitcoin's chart, you'll be fine.
I mean, I completely agree with that, Michael. Most of the times there is no clear, as we said, there is no clear causation. It's very hard to find clear causation in different parts of the markets. They always try and do that. They always try and say talk about dollar strength and the equity markets. I have a tutorial in my campus showing how it's a coin flip. Dollar strength has nothing to do with the stock market rising or falling. Same thing with commodities. They always try and talk about oil and the equity markets. They always try and talk about gold and the equity markets. These are different asset classes, and it's very hard to find exact causations in them, right? You can see some correlations, but you don't know the reason for it. So you don't know when it's going to break down. So there's absolutely no reason to try and figure out what Bitcoin will do based on some other asset class. Just look at the chart, look at what the price is doing. If people are buying, price will go up. If people are selling, price will go down. Just follow the price. That's it. You're simply trading momentum. That's what you're trying to do. You're not trying to guess the future. You're simply trying to get on a train that's already going somewhere and trying to get off before the train stops. That's it.
Absolutely, 100%. I mean, that's one of the things that everyone should really, really think about is correlation versus causation. Finding causal effects is so difficult, and it's not to say you shouldn't try, or if you find it, it can be very, very profitable. But so much of what people think is causal is actually just correlation. It's, oh look, dollar went down, crypto went up, or crypto went up and stocks went up, or gold went up and crypto went up. It's quite often, like almost always, just correlation, not really causation. It's not like gold's going up, so the people buying gold think we must also buy Bitcoin, right? You saw this with gold's outperformance, why Bitcoin didn't go up in the past few weeks, because you've got like China and Russia and Iran and all these governments accumulating gold. They're not going to have a directive to say, oh, let's also stack Bitcoin at the same time, right? So anyone thinking that Bitcoin has to follow gold has obviously seen that breakdown this time. And at certain times, I mean, I remember Bitcoin used to be super correlated to the US 10-year yield in 2021. The Bitcoin chart and the US 10-year yield looked almost the same. Now they don't. It's just these things come and go, you know? Um, Final question. How quick would one be able to spar you or the Tates when they join the war room? I've added you guys final bosses to my big goal. Depends. I mean, as soon as there's an event that we're all at, I guess.
Yep, that's it.
Jonesy Bones, GM. I asked this question in Prof. Michael channel, but yesterday's lesson you mentioned TradingView didn't offer a delta view by volume, but if you click on the indicators tab, search delta, they do in fact have a volume delta tab. No, they do. That wasn't quite what I said. They do have volume delta. It's just that it's calculated differently, right? So if you basically cross compare it to Coinalyze on each individual chart, and if it's the exact same, then great. But so far, what I've seen is that they're calculated differently because TradingView uses a different calculation for delta. But if you find it that it works the same, great. Alex, GM, question for Ayush. Professor Michael mentioned several times that you both trade very similar. Can you give us a quick deep dive into your trading principles? Does price action, market structure, volume divergences, and other stuff apply to stocks? And do you prefer to trade more long-term or higher time frames you trade intraday? And if so, does algo trading exist in stock trading? Thank you both for your time and dedication. So, quick overview of how you trade, bro.
So algo trading exists everywhere,
Mm-hmm.
right? It's simply automated systems. It's just a lot of if-then statements, as we discussed earlier. By the by the by itself, algo trading has been made to seem like something that should freak people out. I have found in my experience it should not. So this is something I tell the stocks campus all the time, guys. There's a book. It's called "Popular Delusions of Crowds and Madness." It's talking about some. I didn't get the exact name. I can mention it later. All right,
Yep.
it's some long name, but it talks about trading in the Dutch stock exchange and the French stock exchange in the 16th and 17th centuries. All right, so at that time there was options. There was stock market for the companies, the East India companies for the different countries, and all different kinds of madness. Then I tell them about the reminiscence of a stock operator. That's in early 1900s, and we are still talking about the same things that were talked about in the 16th and 17th centuries in terms of market price action, how there's euphoria, how the prices crash. All right, we're still talking about trends at that time in 16th and 17th century, in the early 1900s, with Darvis in the 1970s, and now we are talking about trends and consolidations and all the same things. So why am I saying all of that? Because think of all the technological advancements that have happened since the 16th century, and yet price keeps moving the same way. We have computers, right? We have internet, we have quick decision making processes, we have quick communication, and price still moves the same way. And the reason for that, at least this might sound a bit esoteric, but that's the reason I came up with, is because at the end of the day, I think of price as a physical representation of the energy that the buyers and sellers are bringing. Now that buyer could be an algo, it could be a human, it could be a monkey throwing darts at the wall. It doesn't fucking matter. It's still a buyer. He still has to buy something, right? And that's going to show up in price if the buyer is being aggressive. Same thing if the seller is being aggressive, no matter who gives the sell order, right? If it could be a robot or a human, but the seller has to be aggressive, we will see that in price. So price is simply a physical representation of the energy or the aggressiveness that the buyers and sellers are bringing. And the energy has to move in a specific way. It moves in consolidations and then it starts a trend in a certain direction. And for that, I gave an example in Stocks Campus, like why are things in consolidations? Because there's no catalyst or stimulus to break it out, right? There's just balance, right? At the end of the day, it's supply and demand, so there's balance. Now when the demand goes high, because let's say a company is buying back their stock, or just the number of share, or there's a merger, right? So if the supply